Good evening, ladies and gentlemen. It's a very fine turnout we've got tonight. I really appreciate you all turning up in this horrible weather we've been having. So I'd like to introduce myself, John Bond, and I'll introduce the other performers a little later. With the Sydney lockdown, we're going to have a couple of Zoom guests shortly. I just wanted to first of all mention John McBain and Jason Huljich, who you'll see shortly, who are the joint CEOs of Centuria, and John is the MD. And I think once we get going, they'll say a few words about Centuria and what's happening there. I'd also like to make a mention of all the staff who've turned up tonight, and I'd love you to go and have a look around and make sure you introduce yourself. There are about 20 of our staff here tonight. And a special thank you to Sue and Carolyn and Illyria and Claire for doing all the hard yards here. Maybe it's too early because we haven't seen whether the Zoom works yet, but maybe better to thank them early. So the format tonight is I'll introduce the speakers in a moment. John McBain and Jason Huljich from Centuria will talk about their business and how it's going to impact on us positively. I'll deal with some of the frequently asked questions. So we've had a number of questions since the merger, and I'm going to do my best to answer some of them, and there'll be more opportunity for questions later. We'll have a market update from myself, Bruce McCully and David Schwartz, and then we'll finish with some further questions. You'll notice that there are 3 chairs. One is for Jim, but he hasn't deigned to sit up here yet. I'm hoping by the end he might come up. So I'd now like to introduce John McBain and Jason Huljich, who any minute I'm hoping are going to come up on a screen. I got to know John more than 5 years ago, and we struck up a great rapport. I used to visit him in Sydney and we'd have a coffee and talk about property, and it soon became apparent that we had a very similar philosophy in relation to property. In our heart of hearts, we were property investors, not fund managers, and we'd often talked about doing a property transaction together. Well, that never happened, but instead we put the companies together. So it's been a wonderful thing for us. And Jason and John have a very similar history to Jim, David and myself. They started together more than 25 years ago. They started with a small large format retail centre that was in a lot of trouble and thought they could fix it up, and they went from those small beginnings, as we did with the Gwelup shopping centre, to build an empire with $10 billion of assets around Australia. So if they're on the screen, as you can see from left to right, I'm trusting you all know myself, David and Jim, but if not, David will come on the screen shortly, Jim at the end of the table there. And then from your left to right, John McBain, Jason Huljich and Bruce McCully. Now Bruce is here sitting also on the dais. Bruce joined us about a year or so ago. He's got a great history in the property industry, and he's just been promoted under the Centuria banner to be now the General Manager for WA and the Head of Retail for Primewest. And prior to us, he had 10 years as state property manager for Coles, and that was covering WA, South Australia and New South Wales. He also had senior roles at Macquarie Bank, Centro Properties and Metcash. And I have to say that he's been wonderful since he came. There's nothing that he doesn't know about a Coles and Woolworths store. And so Bruce will speak to us a little later about retail. But I'd now like to introduce John McBain and get him to say a few words about Centuria.
Thank you very much, John. I just want to make sure that everyone can hear me clearly before I go on.
Yeah, that's fine, John.
Okay, thank you. Firstly, our apologies for being unable to appear tonight in person. Obviously, either Jason or I or both of us would far prefer to be in your state, but of course in New South Wales we're locked down and we don't really know how long it's going to be for. But at least we're not transmitting anything contagious over the internet, you can be assured of that. John, thank you for that kind introduction. And I echo those words sincerely, 100%. John was alluding to the fact that he and I would often buy things and we would see complete sense in what the other bought. Centuria and Primewest would often buy things and we could see the sense. And sometimes we scratch our heads looking at what people pay for other things. So, and the other thing, he virtually paralleled me. I could completely agree. We are property investors first. Funds management is a byproduct of that. And we hope that we honour our commitments to our investors faithfully and loyally over, in both companies, a long period of time. But if we don't have some stock and some investments that work out well for the long term, you're nowhere. As John pointed out, Jason and I have been together for a long time. Jason can probably tell you how many years, days, months, minutes and seconds, but it's been a very effective partnership, and Jason's highly regarded in the property community, as are John, David and Jim. I've only got a couple of minutes to speak, so I just on the screen I hope you can see a bit of an overview of the Centuria group as it stands now. And there's just under 17 billion of assets under management, far more than we thought we would ever get, because we didn't think we'd find that much quality property. And around a third of it is in listed real estate, and Centuria has a couple of platforms. Jason will quickly address them in a moment, office and industrial. But what's fantastic about the merger with Primewest is we've now got very broad spectrum unlisted opportunities. And once again, I'll let Jason talk to you, but it's one of the most exciting things. Thank you very much for attending tonight. I really enjoyed meeting some of you at the dinner. Jason and Simon met some of you at the dinners a few months ago, and we look forward to many more of those dinners. We really understand Primewest as a business because that's exactly how our business started, and we've still got families that have been investing with us for almost 30 years in some cases. Probably in closing, I think the integration, a couple of things. The integration, whilst it's at reasonably early stages, is going extremely well, and you can see the reach of our group now. I think New Zealand and Western Australia, the eastern states, we're not planning on going crazy and going all over the place, but I think we've got a really good base now to be a formidable force in the market, and that will attract the sort of assets that we want to buy on your behalf, and we'll be co-investing alongside you in them. Two things finally, one quote actually from each of the Primewest founders. Early days, John Bond said to someone when we were making a presentation, he said, it fits like a hand in a glove. And John, you are precisely correct. Nothing we've learnt over the last couple of months has been anything but encouraging. And then David Schwartz, I'm going to paraphrase you too, and David's, one of David's sayings, and he has many, is 1 + 1 must always equal 3. And David, I've enjoyed getting to know David better, and agriculture. I live on a small farm, and he's got me really interested in agriculture. So I think that's an area that we're going to see a lot more of. I'll hand over to my longtime business partner, Jason Huljich. Thank you very much for coming tonight.
Thank you, John. And so I'll just briefly introduce Jason. He's the joint CEO of Centuria, and he's going to highlight some of Centuria's strengths in areas interesting where we're not, particularly around office, industrial and healthcare, and there'll be new areas in the East Coast and elsewhere that our investors will now get the opportunity to invest with them. So over to you, Jason.
Thanks, John, and good evening, everyone, and thanks for coming along tonight. I think one of the key benefits of this merger of the two groups is going to be the breadth of opportunities that we're going to be able to present to you, our investor clients. As you would be aware, Primewest has been very active in a number of sectors, so agriculture is something new for the Centuria team. but we can see it being a big growth part of the platform. Andrew Towd and the team have a really strong pipeline of both off-market and on-market opportunities. And the main metrics of these are high quality operators, long-term leases, and so you'll continue to see these agricultural opportunities come through. On the industrial side of things, you have been seeing industrial through Primewest. We're very industrially focused. We have a very large industrial REIT, and because of that, we seem to see a lot of opportunities in the space, both on market and off market, particularly off market. So you'll probably see an increased level of industrial opportunities coming through on the unlisted side. Office, with both groups have strong histories in the office sector, and that's where we started. And it was great to see our first fund that we've brought out to the Primewest Investor Group being an office fund. It was our Centuria Government Income Property Fund, which is the building on the right of the slide. It was a very high quality asset, modern, well built, very high sustainability metrics, and long-term leases to 3 government departments down in Footscray, Victoria. And it was great that a number of you invested into this fund. So I'd like to thank you for your support. Retail and large format retail. Centuria hasn't done a lot of that more recently. We have done a number of large format retail opportunities historically, but it's great to be getting back into that sector. On the Centuria side of things, a couple of new sectors that you wouldn't have seen a lot of deal flow through on the Primewest side is healthcare and debt funds. So on healthcare side of things, we've got quite a large healthcare platform. It's all unlisted. We've got an open-ended healthcare property fund that we commenced about a year ago, and that's been very, very strong. So that's been buying assets such as short stay hospitals and medical centres around Australia, anchored to some of the very large medical operators, and again, very long-term leases like the agricultural assets. So I think you'll continue to see some healthcare opportunities coming through, and it's definitely one of those sectors like industrial at the moment that has very, very strong demand. So we're seeing some really strong cap rate compression and some very strong total shareholder returns there. Debt funds is another one. We've been involved in debt funds for the last 3 or 4 years, and more recently we bought a 50% share in a group called Bass Capital, which is a well-established debt fund provider. Very experienced guys, come from big, very, very large institutions, and you'll start to see probably in the next couple of months some debt fund opportunities coming through as well. So we have a number of structures in the debt funds. We have single debt funds as well as an open-ended credit fund as well. So there'll be a new product that you'll see shortly as well. So look, I'd just like to thank you all for your support, and obviously John and I are here to answer any questions at all going forward, and hopefully we'll have some fantastic opportunities coming through to you over the next 6 to 12 months.
Thanks very much, Jason. And we look forward to seeing you both in person when Sydney lets you out and Mr. McGowan lets you in. So we'll move on now to a few of the frequently asked questions that have occurred on and around the merger. I'll answer some of these questions, and there's plenty of staff here tonight who would also be able to help. So the first one is, does anything change in my investments in the trust? The answer to that is definitely no. The merger was at the listed corporate level, and all of your interests in the underlying trusts remain unchanged. Another question we had is, when will I receive distributions? Again, nothing will change there. The vast majority of our trusts, as you know, distribute monthly, and that will remain the same. We know that's very important for our investors, and they rely on those regular income streams, so that will remain unchanged. What reporting will I receive? We've just issued the annual executive reports, and reporting will only improve under the Centuria scenario. I have to say I've had a look at their reporting, and it is actually better than ours. So you can look forward to probably better reports going forward. The other thing that's streamlined now is that all those reports will be uploaded into Boardroom. So you'll have copies of them to keep in one place and review it at your leisure. Another big question is, what is Boardroom? Well, it's an online portal that serves to provide you access to information on your investments and allows you to update your details easily. They'll manage our unlisted unit trusts, so all of our unit registers will be on Boardroom and provide an additional layer of governance and security for our unit holders. So the portal will contain all your holdings, investor reports, unit pricing, and the financial reports that will be posted in due course later this year. A large number of you have registered and linked your different entities, but if you do need assistance, and I know some people have found this a little tricky, the office is always on hand. The mighty O'Leary, who is here tonight, is there to help you, plus other staff in the office. And I think once you get the hang of it, you will really appreciate it, because you'll be able to just log in with one login. Every investment you have in an underlying trust will pop up. You can also link your shares in Centuria. You'll be able to see literally everything there on the one site. So I encourage you to have a go, and if you get into trouble, we're there to help. Another question was, can I still call up and speak to someone, aka O'Leary? Absolutely. This business was built on family and friends from the start, and it's the way that we want to keep it. You're all part of our big family, and we need to make sure that you're looked after. And so if there are any questions, any issues, any problems at all, we're still there, and we will look after it for you. There was another one, will there still be opportunities to invest in new trusts? The answer to that is yes. We've now got a bigger capital transactions team. We've merged the two teams, and that gives us access to more opportunities right around Australia. And as Jason explained, some of those opportunities are areas that we have not been in historically. They'll all be available to Primewest investors. And as he mentioned, there's also the potential for debt transactions through Centuria Bass. So we're very focused on our investors still here in Perth. We want to make sure that they're serviced as well as they always have, or better. And we'll look for transactions that have suited you in the past and that will stand you in good stead in the future. One of those opportunities that David Schwartz will speak about shortly is Agricultural Trust number 2. I might just now move on to market updates, and I'll start with office. On the screen you'll see a map of Australia with some statistics. I guess the ones to highlight are the vacancy rate, and you'll note that Perth has got the highest vacancy in Australia, and that's obviously challenging. What does that mean? It means that incentives that we have to pay to tenants are going to be high. They're stubbornly high at the moment, around 50% of their net rent. And the other thing it means is that there is a flight to quality. So it's really, really important that our assets are best in class. And right at the moment, we're in the throes of doing a new lobby in 251 St George's Terrace, and we're planning another one in Australia Place. There are end-of-trip facilities, bike storage, showers, etc. going in a number of locations as well. And we're making sure that our assets are the best available for the type of asset that suits tenants. The other thing on that slide that's interesting is yields, and you'll also see that Perth has the highest yields in Australia. What does that mean? It means that we're actually attracting a bit of interest from both interstate and overseas investors who think this is a good place to invest, and that's a good endorsement of us and our assets here. And a good example of that was the BlackRock acquisition of 140 St George's Terrace. They came to us. That's a mandate we have, as we do have with the Singaporean GIC investment fund. So we bought that building together. Primewest has a 10% interest, and we're managing the asset and looking after the leasing. BlackRock is one of the largest institutions in the world. Its assets are in the trillions, and it chose both Primewest and Perth to make this investment. So I think it's a good endorsement of where they see the market at the moment. So while vacancy is high and incentives are high, I think the future is reasonably good for WA, and it's quite clear in an economic sense that WA is performing best of all the states in Australia. We've been blessed with almost no lockdowns as opposed to other states, and business is doing very, very well. And what that means is, as you will have seen if you invest in the stock market at all, there are 3 or 4 floats happening a week in Perth at the moment. All those companies need office space. Now, a lot of them are very small, but it doesn't matter. There's a growing demand from tenants for space, and I think it bodes well for our office assets in Perth. I think I'll leave it at that for the office, and then I might introduce Bruce McCully now to talk about retail and the large format retail. I'd introduce Bruce McCully.
Thanks, John. Good evening, everyone. Just give you a bit of a rundown on what we're doing in the retail sector and the large format sector. And just the next slide, thanks. So, as John said, it was a map of Australia around retail. Retail is moving so fast at the moment. We've got yields up on the screen that if we could buy assets at those yields, we'd be buying a lot of them. They've changed probably by 1% at least in the last 6 months. Assets that we've bought, when COVID first hit, we were pretty active with GIC, and we bought 3 assets in Sydney within a month. Sarah Jacobs, who's here, looks after our retail cap trans side, and they've performed so well. They've gone from a 6.25% cap rate down to about a 4.75% cap rate. Our overall retail portfolio, the revals that we've had on that, we've grown just on revaluations by $79 million in the last 12 months. So a 7.5% increase in val just from in valuations. Our vacancy is really low. Vacancy across the country is sitting at around 3%, which that includes development assets as well. So on an actual consistent basis where most of our centres are fully leased. Just to give you a view of what we're doing, Ellenbrook, we launched a new shopping centre at Ellenbrook, which was a land acquisition and a development that we did. Our development team delivered that. It's a Woolworths and 13 specialty shops with a McDonald's and a Red Rooster pad site. All the shops are leased. There's 2 that are yet to be finalised, but heads are done. In this environment, that's an amazing result to launch a new development and have it fully leased. Would recommend you go and have a look at it actually. It's a really, really impressive development. We're adding value to a lot of our other centres. So Bunbury, we're doing an office development down in Bunbury. There was the old Sterling Centre, which was pretty obsolete in its current format. There's a new federal government office building being put in there. We're doing a Aldi store in our new centre in Moonee Market in New South Wales. Cottesloe Central, we're doing a Woolworths expansion. We took over Chester Pass Mall in Albany and Hervey Bay in Queensland from M Group, which we took them over in about December last year. We're doing a lot of work with Albany. We bought a centre in Melbourne in South Bank, which Melbourne's not having the greatest time of it at the moment with COVID, but it's a new development, a long-term lease with Woolworths and a fantastic location. And we're about to settle on Coles in Byford, which we've bought direct off Coles. So the growth in that sector has been huge, and the performance of the assets has been really strong during the last 12 months. Just on the large format side, just next slide. So same story with large format. The cap rates have compressed so much. We bought a centre in Robina, which I believe a fair few of you participated in. That was a large format asset that we bought off QIC, which has performed extremely well since we bought it. There's a development site across the road that's just gone on the market for sale, and the price that we're being told that someone's transacted on that for is probably about 30% more than we would think it would be worth. So the market's just continuing to grow. We also did valuations on large format have grown by $106 million over the last 12 months, just like-for-like properties. So that's a 10.65% growth in vals, and we think that's probably got a fair bit of room to go because valuers are generally behind the market in terms of what the market's doing in actual transactions. Vacancies are extremely low, 1.8% around the sector. Ellenbrook, we also did a large format development in Ellenbrook, which there's a couple of tenants fitting out now. We've got about 2 tenancies left to lease. The overall Ellenbrook Trust has performed extremely well. And then we're unfortunately or fortunately doing a new development at Melville because we had Spotlight burned down, but we managed to secure some additional land, and we've done a new deal with Spotlight to increase the size of that box, and overall a fantastic result for the property and for the investors. Thanks very much.
Thanks, Bruce. I'd now like to introduce David Schwartz, who I'm sure you all know, and I'm sure he's chafing at the bit to be here. Unfortunately, he can't, and we'll do the next best thing, and he'll talk to you about industrial and agricultural investments.
Thanks, John. Good evening, everybody. I came across to Sydney to make sure that we followed up on when we did the transaction. Like John McBain said, I wanted to make sure that the transaction would deliver 1 plus 1 = 3 for our investors. So I came across to make sure that we delivered the best of both companies and can deliver the best of both companies to our investors, and have been stuck here for the last 4 weeks. On the industrial front, it's one of the sectors that have proven to be very resilient. COVID has been a big boost, not that it needed COVID to boost it, because with what's happening with all the online purchases, industrial has become the favourite area of investment. It's got one of the lowest vacancies across the country, and it's a very stable sector. Online has grown, and especially over the last 12 months, by nearly 25%, and that's driven further demand for industrial property. The other interesting thing is that because a lot of the offshore buyers can't come and look at the properties, it's made it less competitive than it was before. If you look at the opportunities, Western Australia is giving and delivers the highest returns in industrial, and I think that that's just going to improve from here. There's a lot of demand, as John was mentioning, also on the office front. The vacancy seems to be tightening, and the opportunities for rental growth and cap rate compression in the West Australian market, I think are going to be particularly positive. What we're also looking forward to, I don't know if many of you are aware, but Centuria are probably the second biggest, or we're the second biggest buyer of industrial properties last year. And we're hoping that with the merger, we'll be able to deliver more opportunities in this sector with the knowledge and connections that Centuria will deliver to us. On the agricultural side, it's an area that we've been moving into. We see it as a very good growth area. Over the last 10 years, agriculture, the capital value of the land has increased on average across Australia by about 7.6% per annum compounded. What we're looking at is taking on properties where we do not take on the operational risk. We want properties that have got water. We want properties that have got predictable returns. And what we're finding is that properties that have biological assets, trees, orchards, and so on, are the ones that are being able to deliver the best returns to our investors. What we're also finding is an advantage is that we get long-term leases from good operators, delivers good returns and good stable income. Our first trust that we put together, we've got 5 properties, so there's a blend of income, and we're now looking and raising money for the Primewest Agricultural Fund number 2. That trust is now open for investment. The trust will be delivering a return of 7% per annum paid monthly, and we are assured that that's going to be able to deliver capital growth both from the land and from the water. We have a 12-year lease committed by Rock Capital, and they have their partners, which are Cbus in that syndicate, that will be the operators of the farm. Like I said before, we want properties that are going to give us predictable returns, and we do not take on the operational risk. This particular property is growing almonds. Almonds are a very profitable crop. It takes a long time to produce these orchards. It takes about 4 to 5 years to get the trees to full production. And this particular property has got 137,000 trees planted on it. So it'll be in full production in about 2 years' time. And there's also, the property comes with very good water resources. It has a license to produce that you can draw 5,300 megalitres of water from, and that's more than sufficient to water all the trees when they're in full production. We believe this is going to be a fantastic asset. Like I said, it will deliver the 7% cash on cash, but on top of that, we believe that there will be capital growth in both the land and the water asset. The water is what produces. The more water you give to the plant, the more it produces. We've got plenty of water, so this farm should be an extremely successful property going forward. This is the first asset in the trust. We're planning to do other assets. One of the assets that we have that we are looking at, and it's in due diligence at the moment, is an apple orchard in New South Wales. And we have a short video to show you what this property will look like and what it could deliver. If you could just start the video there, please.
For myself, I've been in farming my whole life. Our family, I think we started farming in Australia in 1842 and have farmed ever since. But I've had the privilege of working across different areas. I've worked in banking, I've worked in property, I've worked in agronomy, and not often do you see a farm with the depth of all of those ingredients. They've got the history, they've got great management, they've got great agronomics, and they've got an amazing financial business. The group, because it came out of a foundation 100 years ago where you have all of those individual farmers that have contributed over the years. A lot of those farmers are still involved today. So you've got generations of knowledge supporting the orchard group, and you just don't get that anywhere else. The farms are all close to the towns of Batlow and Stanthorpe. They're reasonably remote, but they're very well-serviced areas. And a lot of the people that work on the farms have worked here for generations, and they do treat it like their own, which is an absolute bonus for us as the custodians of these assets. We know that they're in really good hands. This area here, for example, in Stanthorpe, they've got 8 single farms that make up the farming aggregation. And so they've got a really good spread of harvest time, and they've got a really good spread of age of trees and varieties, so that you're hitting the markets at the right time. A lot of the older trees like these are grown in a traditional way, but they're now going into a trellis system, which is a lot higher density, a lot higher yielding, a lot more efficient to manage, and that's where the technology play is coming in, and these guys are at the forefront of technology, working with groups like Swarm Farm to gain efficiencies that others don't have. The one thing that they're certainly not making is more areas like this that are absolutely suited to permanent plantings. And the barriers to entry for competition to an asset like this, where you're $150,000, $200,000 per hectare just to get this set up, and then 5 to 8 years before you actually get income. It's an industry where you're pretty safe from competition, And the demand for apples, for juicing apples, for all of those things is huge at the moment, and has been and will continue to be. So from an investment point of view, I think a lot of times you've got investors who they'll hear about drought, they'll hear about flood, they'll hear about all the disasters that you can get in an agricultural investment. And this investment is a really safe investment when compared to others. It's got that 100-year tenure, it's survived the drought, it's got the water security, it's got the geographic location, it's got the agronomy, and it's got the business skill and overarching management of the whole group that makes this a really safe investment for us as fund managers and for our investors as well.
Yeah, so that's, well, I can't see the video, but yeah, you can see it's a very impressive property, and hopefully, like I say, we're in the middle of due diligence, and hopefully we'll be able to put that one together with this almond property that we've got. We're raising capital at the moment, and like I say, between those two farms, there are two fantastic assets to be investing in.
I might also just mention that the gentleman speaking is Andrew Tout, who is actually our head of agriculture. He's new to us in the last 12 months or so, and I hope you got the impression, as we have, that he knows a lot about agriculture, and he's brought a lot of opportunities to us that we would not otherwise see, and they're opportunities which don't necessarily go out to the wider market. His network through agriculture in Australia is second to none. So. And these two are perfect examples of that. They're really great assets, and we're hoping that he'll bring us more opportunities in time to come. So he's working out of the Sydney office now of Centuria, in charge of the agricultural side for us. Anything more you wanted to add, David?
No, that's about it.
All right. Well, look, that was the presentation. We're very happy to have questions either now or at drinks afterwards, whichever you prefer. You can direct all of the curly ones to Jim and Bruce, and you fire away as you wish. There is a microphone up the back if you would like it.
It's not a curly question, it's an opportunity on behalf of myself and other financial numpties who, but for the great stewardship of John, David and Jim, I would have been floundering. And so I'd like to express a sincere note of thanks to the three of you for the extraordinary stewardship and integrity with which you have invested mine and our monies. It's but for knowing the integrity of the three of you, I wouldn't have been here and wouldn't have the security that I do today. So I thank you all for that. Integrity has a greater value than the money itself. And it's the three of you gentlemen, the integrity with which you've conducted yourselves, that I would like to express my sincere thanks. Thank you, gentlemen.
Thank you, David. We better have a curly one after that. No? Everyone lost their tongue? Oh, good. Okay, well, look, there's more drinks outside, there's some more nibbles, and as I said, there are about 20 staff members here tonight. They're all available to say hello to you and talk about various of your investments, and so we'll be there too, and it's an opportunity to mingle with your co-investors. And so once again, from our point of view, we really appreciate your continued support, which has been over a tremendously long period of time, and we take that trust you've put in us very seriously, and we look forward to a bright future for all of us going forward. Thank you very much.
Thank you.